Well, let's shift gears now and move to our next story. Well, the Kenya Association of Manufacturers is calling on the National Treasury to review existing tax rates to enable manufacturers increase investment across the country. The proposals by CAM were made during a public hearing by the Institute of Economic Affairs as part of the public participation process. Key proposals include creation of a special fund to facilitate VAT refunds and amendments to the Income Tax Act to allow companies that buy out warehouses and manufacturing plants to benefit from investment deduction allowance.
That investment deduction allowance is only allowed when you're doing actual construction, but is not allowed when you buy off a warehouse so that you can start a manufacturing hub from another party. Under these, you find it is disadvantaging one who is constructing, and there's no need of constructing in a space whereby you can buy off. There's no need of doing that construction, because even there's some investment that are lying idle, which ought to be offloaded to other users. Under these, the recommendation is to ensure that investment deduction allowance is not only being allowed to those who are doing construction, but also is being allowed to those who are buying off warehouses from other players. We know at the moment the March refund, like now the manufacturers or the private sector is owed out of VAT refunds, stands at around 27 to 30 billion Kenya shillings. Out of these, you find the allocation that is given by Treasury is about 1.2 billion Kenya shillings, which is not enough for KRA to be able to refund commensurate to what they generate as VAT refunds monthly. The estimation is they should be receiving about 5 billion Kenya shillings every month so that they can process these refunds, but this is not happening. So what we are asking is the amendment of Public Finance Management Act so that it can include a special fund, or what we are calling the refund fund, which will facilitate KRA to be able to facilitate the private sector with the VAT refunds.
Well, staying with the budget-making process, players within the agricultural sector want the government to put in place longer-term measures to increase agricultural productivity. Here's more.
You realize that when you look at our commodity production, we are deficient. We have deficits running across staples like cereals. We have deficits in pulses. We even have deficits in roots and tubers. So for us to be sufficient, if we close the borders today, we cannot meet our demand. So we have to import. But then the challenge is that every time we import, whatever you're importing comes in at much lower prices. And I can give you the example of rice. Even with 75% tariff, that rice is still cheaper than our own locally produced rice. So the interventions for marketing, like what we did, what was pronounced 2 weeks ago, it's a very short-term gain for farmers because you're just boosting the producer price, but you're not actually helping that farmer become competitive. And then what happens next year? Do you still give another producer price? So the game changer for agriculture would be where we move towards addressing the things that are making us inefficient,